Hi everyone, part 3, here we go. So we're finally introducing some numbers into these conversations. It's accounting after all, they're always numbers. All right, so we've got a bunch of manufacturing costs for a period, and what we're being asked to do is to come up with a report, break it down into direct materials, direct labor, factory overhead, all right? And what might be period costs in here. So the easiest way I think to do this is to kind of identify, go line by line and look at each one of these. So materials used in production, including 56,200 of indirect materials. Okay, so this is the cost of materials, but not all of it is direct materials because 56,200 of it is indirect materials. And we know from our conversation earlier, indirect materials is actually factory overhead. Okay, that means the other, let's see, 607,500 minus 56,200 is 551,300 of this are direct materials. 551,300, right? Which is 607.5 minus the 56.2. All right, they tell us the same thing here. We've got direct labor, including 84.4 of maintenance salaries. Well, maintenance salary is going to be an indirect labor, right? So that is going to also be factory overhead, that little piece right there. All right. That means in this 560, right, this is the direct labor salaries, if you will, 562,500. So we take 562,500 and subtract from it the 84.4 in indirect labor, and we're left with direct labor of 478,100. Okay, now let's take a look at these guys. That way they all have classified into factory overhead. Supervisor salaries, factory overhead, yeah, right, that's factory overhead. So each. Heat, light, power in the factory. Oops, sorry about that. Factory overhead. Sales salaries. That doesn't belong there. That's actually, that's a selling expense. So we're going to knock that out of there. That's selling. Here, I'll try to take the word selling in here. Sales or sales. Insurance and property taxes on the plant. So the factory by plant. Yeah, that's factory overhead. Insurance and property taxes on the corporate offices. No, that's administrative, right? Because it's on the corporate offices, the headquarters. So we're going to strike that out. We're not looking at that. Depreciation on the plant, factory overhead, right? Because it's about the factory. And depreciation on the corporate offices, no. We know that that is an administrative expense because it's about the offices. The corporate offices. Okay, so now that we have these things, the idea is that you're going to put them into this report below. Okay, let me see if I can make this. There we go. All right, so I know it's a little bit tiny, but we have all the information up here. So cost of direct materials, right? We have that 551.3. Direct labor, 478.1. We figured those out. And then these are all the items that I indicated would be factory overhead. 84.4, here we go, indirect labor, indirect materials, 56.2, and then here's the other ones, 517.5, 146.50, 151.9. What? Oh, I skipped one, sales salaries. Let's go back. Let's do that again. There we go, I missed one in here, sales salaries. Well, that's just sales, right? We know that. Sales, I'll type sales. I was like, where's that number? Oh, it's because I missed it. All right, so it's obviously not included. It's a period cost. Okay, so if we did all of this, we would have all of our direct materials, direct labor, and factory overhead costs, and the total cost of making our product, the manufacturing costs for the month, however many we made, is $2,103,800. Okay, hope that makes sense. All right, so I know I said there aren't set reports, but there's some that are kind of industry standards, and one of them is the statement of cost of goods manufactured. The idea is you start with beginning WIP. Right? WIP is work in process. Those are the items that you're working on. We are going to talk about the different categories of inventory in the next chapter, but for now, let's just continue on. Beginning work in process. These are the items that you are currently manufacturing. And what you add to it is you add direct materials, the cost of direct materials, the cost of direct labor, the cost of factory overhead for the month, right? So we kind of have like, WIP is basically an inventory account. So it's almost like this. I know I'm drawing right in the middle here. So WIP is a category of inventory. I probably should type that. And the idea is you start off with some sort of beginning balance, and then we add to it during the course of the month any direct materials, any direct labor, any factory overhead. And those are the costs of the products, right? And then when we finish them, they actually go over to a new category called finished goods inventory. Okay, so when they leave, they're going out to finished goods. That is not pretty, and I know it's not. Sorry, guys. Finished goods. All right. So, as we're working, and then what you'd have is you'd have an ending balance for the products you're still working on that are still in process. Okay, again, I'm getting ahead of myself, but I thought it was important to mention it now because you're starting off the beginning, plus materials, plus labor, plus factory overhead gives you total manufacturing costs, right? All of these are the manufacturing costs for the period. And if you subtract the ending balance of work in process inventory, then you know that all the rest of these was the cost of goods manufactured during the course of the month. Okay, we are going to use a statement, not too much yet. We'll use it more in the future, but we do use it a little bit. The income statement is also going to look a little bit different because we've got sales. This is the norm, right? Sales minus cost of goods sold gives you gross profit minus any operating expenses, which are the selling and administrative expenses. So we just have a little bit more going on in here in the cost of goods sold category because the idea here is you start off with beginning inventory plus the costs during this month. Right, so beginning finished goods inventory. Those are the ones that are done. Finished goods means they're sitting on the shelves ready for sale. So beginning finished goods inventory plus the costs of making products during the course of this month, finishing them, gives us how many we have available for sale. We subtract from there what we have left over during the month, and we assume we sold everything else. I know that's a lot to think about right now, but we will get there with a T account. I'll show you in a bit. I can kind of show you a mini T account right now. Let's see if we can do it. So if you have a finished goods item here, a category of inventory, and I know my lines are not good, but they're not that bad usually though. Let's undo that. Let's try that again. There we go. Finished goods. The idea is you start off with a beginning balance in finished goods, plus the cost of goods manufactured. Cost of goods manufactured. There you go. Cost of goods manufactured. And these two together are the ones you have available for sale, right? Everything that's sitting on your shelves plus all the ones that you did during the course of the month. Those two are available. Those two together are what you have available for sale during the month. And from there, if we draw another line, I may not have tracked the cost of the items that I sold, but what I do know is I do know my ending balance. I do know how many finished goods are still sitting on my shelves ready for sale. So you have beginning balance plus the ones you made minus the ones you sold give you an ending balance. If I have these pieces, I can figure out what I sold right here. And this is the cost of goods sold. Okay, so we kind of back into that number. Oh, it's not going to let me do that. Probably shouldn't have done it that way. All right, we're going to delete that because you can't type in there. All right, cost of goods sold. This is the products that you've sold. So now you had your beginning ones plus the ones we made this month minus the ones we sold would give us the ending balance. And let's see if it'll let me do it now. This is the number we're backing into here at this little calculation on top. Okay, probably be easier to see with numbers, which we will get to. Actually, these are the numbers. Hang on, pause a second so I can hide the answers. All right, there's a lot of information here on this last problem, so let's organize a little bit. Something I like to do, big fan of T accounts, I think I mentioned that before, is what I'm going to do is I'm going to kind of keep T accounts on the side here. Ooh, there we go. All right, so we're going to keep some T accounts on the side, and I'm going to work them on, unfortunately I can only capture one screen at a time, and my touch screen is not this screen, so I'm going to be doing this on the side. But I've got 3 T accounts you can set up on your paper: materials, work in process, and finished goods. Okay, so, well, actually, maybe I can do this. We'll see. I just can't write because I see that I've got a letter option. All right, materials. You're starting off with materials. What we're ultimately looking to do here, let me step back, is this is the cost data for the month, beginning work in process, beginning categories of inventory. And there are 3 categories of inventory. I mentioned it before. We're going to talk about it in more detail in the next chapter. We've got 3 categories of inventory: beginning materials, which are the ones that are like untouched; work in process, the ones that are currently being worked on; and finished goods, the ones that are ready for sale. And we've got, the balances of the accounts from the beginning of the month to the end of the month, and we also have direct labor materials purchased during the month, factory overhead costs, and so on. So they want us to prepare a cost of goods manufactured statement. And I like to kind of side illustrate it with these T accounts, okay? Because I just think it's helpful to be able to visualize it. And I wish I could make this a little bit smaller. Nope. Okay, here's what it is. So that I can go through these. All right, so if we start off with materials, what they have here is materials at the beginning of the month are 180,000, right? And by the end of the month, coming down here for ending balance here, they are 145,500. Right, so if I could draw a line, I would. Don't know if I can. Okay. Okay, it's probably not going to be the best. All right, so beginning of the month balance, end of the month balance. Obviously, we used some materials, but we also bought some. It says here that we bought $1,375,000 of materials during the month. So let's get that in there. These were our purchases. So beginning balance plus purchases, $1,375,000. Those are all the materials I have available to me. But at the end of the month, I only have 145,500 left, which means I had to have put some of these materials into production. Okay, so if we take the 180,000, look, I've got a calculator here, 180,000 plus the 137,500, too many zeros, minus the ending balance of 145,500, you wind up with $1,409,500 of materials that were used during the month. Right, these are the materials that actually went into the work in process. So click out of that, and I'm going to draw a hideous arrow. These are the direct materials that went into the work in process. DM. All right, so now let's take a look at the work in process account. The work in process account started with a balance of 334,600. We're going to do the same thing, kind of. 334,600. That was our beginning balance in there. Okay, we're going to draw our line. Our ending balance in that account was 290,700 here. I'll draw a line and finish goods before we can get there. Final balance in that account, 290,700. And I say to myself, okay, well, what goes in the work in process? Well, direct materials goes in the work in process, so let's get that in there. That's that 1,409,500 that came over from the materials. So you've got beginning work in process plus direct materials. Guess what's next? Plus direct labor of 2,260,000. The other thing you have is you have factory overhead going into your WIP. So if I added all of these guys together, all right, so if I added all, no, I don't want the solution of it. That's a fail. All right, well, we're getting there anyway. If I added all of these guys up, that would be my factory overhead. And that would be, let's see, I have the number, I can cheat a little bit here. Factory overhead. There we go. 321,000. That doesn't seem high enough. I guess it is. 321,600 during the course of the month. Okay, so we have all of these guys here. All these numbers here. And we know that the final number is 290,700. So we've got 334,600, 1,409, 226,000. And you've got the factory overhead of 321,600. And we subtract the 290,700, 334,600. Hang on. I'm going to pause this so I can do this without eating up on time. Oh, I guess I can't pause this. All right, we're going to keep rolling. 334,600 plus 1,409,500 plus 226,000 plus 321,600. You're at 4,325,700 minus the 290,700 that's still being worked on. It looks like we completed of the work in process during the month 4,035,000 in finished goods. Right, that's what went to the next process. All right, so draw a little arrow again. That is not. Oh, that's what I was looking for. That's what goes over to finished goods. So the next thing we need to know is looking at finished goods. We've got a beginning finished goods of 675,000. We know that 4,035,000 came over. 4035, 1, 2, 3. And we know that our ending balance in finished goods is 715,000. So what we must have sold, these two right here is basically my cost of goods available for sale. All right, I had 675 sitting on the shelf. I brought in another 4,035,000. So really I had 4,710,000 available for sale, and there's still 715,000 sitting on my shelf, which means I must have sold, we add these two and subtract this one, I must have sold 3,995,000. Okay, so now that, I feel like I'm missing a zero. I am missing a zero. There we go. Now that we kind of have all these numbers and we've kind of arranged this picture, if you will, right? You've got your beginning WIP plus direct materials plus direct labor plus factory overhead and so on. Now that we've arranged these all, let's look at it in a spreadsheet. We're going to grab all these numbers. Here's my beginning work in process, because this is a statement of cost of goods manufactured. You've got 334.6. That's where you started beginning work in process inventory. And then we have to add direct materials. Well, we don't have direct materials. We have to do a little bit of math there. The ones that I showed you below. You know what? Let me just go this way. I'll minimize this for now, so I can show you this side. Oh, it's cutting it off. I don't know why. Ah, notepad, or this is a mystery, right? There we go. Forget it, I'll just make it big. Okay, so we've got materials. We had 180 plus the 1375 in purchases gave us, this is the cost, this is the subtotal cost of materials available. Minus the ending balance gave us what materials went into process during the month. So there's the 1,409,500. And then, so now we have direct materials that went into WIP during the month. You've got beginning work in process plus direct materials plus direct labor, and now plus the factory overhead. And the factory overhead, like we said, was all of those numbers on the bottom. Okay, and that added up to 321,600, which is the same number I have here. Okay, I know I'm all over the page here trying to show you this. Okay, so the next thing it says is these are the costs, these three things. This is all my direct materials, this is all my direct labor, this is all my factory overhead. 3,991,000 if we added it all together. And then we say plus what we already started with, 334,600, gives me the total manufacturing costs of 4,325,700, which we don't really see anywhere. Minus the work in process inventory at the end of the time period, 290,700, and that gives us a cost of goods manufactured of 4,035,000, which I figured out using my T accounts. I didn't even need to get to the finished goods part of it. I feel like there's a second part of this question, though, that then asks that. So really what I did is I did it in T accounts because I think it's easier to visualize, but this is how it's going to look in the cost of goods manufactured format. Beginning WIP plus direct materials plus direct labor plus factory overhead minus what is still being worked on. That tells me what the cost of goods manufactured for the month are. And I feel like the rest of this problem, there's a part B that asks you what is the finished goods balance, and this is how you figure it out. Same thing, beginning, ending, what was finished, minus what's still sitting on my shelves and ending inventory. Okay? All right. I hope that helps add to whatever you're, the reading in the book that you are using to clarify this material for yourself. I hope you're reading the book. All right. And that is that. Okay. Have a good day, everybody.